Welcome back to the Growth Universe. Are you looking for reliable investment options to grow your wealth? In this video, we're diving into 5 guaranteed investments that are not only safe, stable, and secure, but also accessible, with most, if not all, requiring less than $100 to get started. Imagine turning your hard-earned savings into a dream come true, a cozy home, a comfortable retirement, or unforgettable adventures. Whether you're just starting your investment journey or looking for reliable ways to diversify your portfolio, this video is for you. Let's unlock the secrets to building a secure and prosperous future together. One rock-solid investment at a time. When it comes to investing, I always say it's like building a house. You need a strong foundation to support everything else. That's where money market funds come in. They're the bedrock of a well-balanced portfolio. Think of them like supercharged savings accounts. They pool your money with other investors' funds and invest in a variety of short-term, low-risk debt securities. These securities could be things like treasury bills or certificates of deposit, CDs, from highly rated banks. The beauty of money market funds is that they offer higher interest rates compared to traditional savings accounts, while still being incredibly safe. Plus, they're highly liquid, meaning you can easily access your money when you need it. One of my personal favorites is the Vanguard Prime Money Market Fund. It's a true workhorse in the investment world, consistently delivering competitive returns and providing peace of mind. But remember, always do your research and choose a fund that aligns with your financial goals. The real power of money market funds lies in their stability and security. They act as a safe haven for your cash, allowing you to preserve your capital while still earning a decent return. So, whether you're saving for a down payment on a house, building an emergency fund, or simply want a safe place to park your cash, money market funds are an excellent option. Diversification is key to long-term success. Consider investing in government and corporate bonds. These offer fixed interest rates for a set term, usually ranging from a few years to several decades. Think of bonds as loans that you make to governments or companies. When you buy a bond, you're essentially lending them money for a set period, and in return, they promise to pay you regular interest payments, known as coupons, and return your principal investment when the bond matures. Starting with government bonds, these are issued by governments to finance their spending. Government securities, including treasury bonds, are widely considered the safest investment option worldwide, as they're supported by the creditworthiness and guarantee of the issuing government, offering investors a highly reliable and stable return. They offer a lower return compared to other investments, but they're incredibly stable and provide a great way to preserve your capital. On the other hand, corporate bonds are issued by companies to raise capital for various purposes, such as expanding their operations or funding new projects. These bonds typically offer higher interest rates compared to government bonds because they carry a slightly higher risk. After all, companies can go bankrupt, whereas governments are less likely to default on their debts. Now, when it comes to choosing corporate bonds, it's crucial to do your due diligence. Look for bonds issued by companies with a strong track record of profitability and a solid financial position. You can find this information by researching their credit ratings. Investing in bonds is like adding sturdy pillars to your investment house. They provide stability, regular income, and diversification to your portfolio. But remember, just like any investment, bonds come with their own set of risks. By carefully selecting bonds that align with your risk tolerance, time horizon, and financial goals, you can mitigate these risks and enjoy the benefits of this valuable asset class. The third safe investment to venture in is a simple yet powerful tool for growing your wealth: high-yield savings accounts. Think of high-yield savings accounts as the cozy living room of your investment house. They provide a comfortable and accessible place to keep your money, while it earns a higher interest rate compared to traditional savings accounts. Online banks, such as Ali Bank and Marcus by Goldman Sachs, often offer higher interest rates to attract customers like you. They have lower overhead costs compared to traditional brick-and-mortar banks, allowing them to pass on the savings to their customers in the form of higher interest rates. These banks are just as safe and secure as their traditional counterparts. They're FDIC insured, meaning your deposits are protected up to $250,000 per depositor per insured bank. One of the biggest advantages of high-yield savings accounts is their liquidity. You can access your money whenever you need it without penalty. This makes them ideal for emergency funds, short-term savings goals, or simply parking your cash while you decide where to invest it next. So, if you're looking for a safe, accessible, and relatively low-risk way to grow your savings, high-yield savings accounts are an excellent option. Now, let's delve into the world of treasury bills, also known as T-bills. Think of T-bills as the reliable car in your investment garage. They provide a safe and secure way to transport your money for the short term. These short-term government securities, issued by central governments and treasuries globally, are widely regarded as one of the safest investment options worldwide, offering a high level of security and stability for investors. When you buy a T-bill, you're essentially lending money to the government for a predetermined period, typically ranging from a few days to 1 year. Unlike traditional bonds that pay regular interest payments, T-bills are sold at a discount to their face value and mature at their full face value. T-bills are incredibly popular among investors seeking a safe haven for their short-term savings. They're backed by the full faith and credit of the issuing government, making them virtually risk-free and providing a high level of security and stability for investors. This makes them an excellent option for parking your emergency fund, saving for a down payment on a house, or simply preserving capital for a future investment opportunity. One of the key advantages of T-bills is their flexibility. They come in various maturities, allowing you to choose an investment horizon that aligns with your financial goals. However, it's important to note that the returns on T-bills are generally lower compared to other investments, reflecting their low-risk nature. But remember, my friends, investing is not always about chasing the highest returns. It's about finding the right balance between risk and reward. So if you're looking for a safe, short-term investment with the backing of your government, T-bills are an excellent option. Another popular investment option is the certificates of deposit, commonly known as CDs, offered by banks. Think of CDs as the cozy guest room in your investment house. They provide a safe and predictable place for your money to stay for a predetermined period, earning a fixed interest rate along the way. When you open a CD, you're essentially committing to keeping your money deposited at a bank or credit union for a specific term, which can range from a few months to several years. In exchange for this commitment, the financial institution offers you a fixed interest rate that's typically higher than what you'd earn with a regular savings account. The beauty of CDs lies in their predictability. You know exactly how much interest you'll earn and when you'll receive your money back. This makes them an attractive option for investors seeking a safe and predictable return on their savings, especially for those with a lower risk tolerance. However, it's important to remember that CDs come with a trade-off for their predictability-limited liquidity. Once you've locked in your money for the specified term, you generally can't withdraw it without incurring a penalty. Another factor to consider is the impact of inflation. While CDs offer a fixed interest rate, inflation can erode the purchasing power of your money over time. So, if you're seeking a safe and predictable way to grow your savings for a specific financial goal, and don't anticipate needing to access your funds before the CD matures, CDs can be an excellent addition to your investment portfolio. As we wrap up our journey through these 5 rock-solid investments, remember that building a secure financial future is like constructing a house. It requires careful planning, a strong foundation, and the right tools for the job. Money market funds, government and corporate bonds, high-yield savings accounts, treasury bills, and certificates of deposit each plays a unique role in diversifying your portfolio and mitigating risk. Start small, stay consistent, and never stop learning. With patience, discipline, and the right knowledge, you can build a brighter financial future, brick by brick. Thank you for watching. If you enjoyed this video and found it helpful, please give it a thumbs up and subscribe to our channel for more content on your personal growth. Don't forget to hit the notification bell so you never miss an update. See you in the next video.